Hello, sir. It's a pleasure having you on our panel today and at the event today. So, I'm going to take this opportunity to speak to you about a couple of important themes that our viewers would like to listen to. Um, just trying to understand with this current bull rally that we are seeing, what are the sectors that you think will continue to be in the bull run, or what are the sectors that you're specifically paying attention to?
Thanks, Monal. So before I answer that, can I do one step back and just re-emphasize the point that as a country we are underinvested in equities, and we are average age of 29 in this country. And if people don't participate in the wealth creation that lies ahead of India, it would be doing a disservice to themselves. And I think barely 5% of our saving is going into equities every year. So the first thing I would say is at least up your exposure to equities. People are doing it through systematic investment plans. By all means, continue. This market is at all-time high, so it's by no means a cheap market. And these kind of markets always have corrections. So only if you can stay the course and last the whole cycle, only then you should be coming in now. And as far as sectors are concerned, in a bull market, typically everything participates. And of course, when you know the trend is up, you want to take the slightly what I call higher beta sectors, which are the cyclicals. In that, at least personally, I've always preferred to play it through the financial space, because whether you're going to the retail consumer or you're selling to the corporates who are involved in infrastructure and commodities and so on, the banks, the insurance companies, the asset management companies, the stock exchanges are all beneficiaries of this. So the centerpiece of the Indian bull market is actually financials. And the two largest sectors, as you know, have always been financials and IT, with, of course, Reliance being a category of its own. So if you cover these three, 60% of the Indian kind of index is covered with that. But within financials, if you stick, and then if you're an individual investor and you're not going into SIPs, obviously you want to have what they call the double engine, where you can find mid caps where you not only get the earning acceleration because they tend to grow faster than the larger companies, but you also have the potential for some P multiple expansion. So if you can get those, and I'm not saying they're easy, then that's the route to go. But for me personally, it's largely been financials, and otherwise it's really bottom up. I can't say I'm going looking for a theme, whether it's EMS or whether it's defense or whether it's recycling something and so on. It really depends on what are the odds and the asymmetrical nature of the bet that you're getting. I hope that answers.
So just another question on this. You said, like, for the mid caps, you need to pick where there's potential. What do you think of the small caps and large caps as well? Now, if you had to pick between the three of them, what would you prefer to invest in at this point in time? And where do you see growth coming in most prominently?
No, I mean, Monal, it's a hard question because we don't go looking as a category saying it's a large cap or a mid cap or a small cap. All I'm saying is you should get the opportunity to find that I could get a multiple expansion and I could get earning acceleration, which is better than, let's say, the market, if that's your benchmark. So if we think the market earnings will grow by 15, if I can get a company at, say, growing at 20 or 25% a year, and if, let's say, the market multiple is 20 and I can get a company at a multiple of 15 and they are available, then naturally you will beat the market by a factor of something. And especially if the company does well for 3 4 years and you have ability to hold. Now, if the nature of the small cap is to remain a small cap, I'm not interested, because getting in, getting out impact cost is very high. But I don't think like that, because if the sector is good, the entrepreneur is good, the opportunity is large. Remember, we made most of our money in a small company called Infosys, which had a 30 crore IPO. And if one had thought it's a small cap and one shouldn't look at it, where would we be today? So opportunities are, I don't think you should think in terms of caps. Just think, where is the asymmetrical nature of the bet? What's the opportunity size, and who's the driver that you're backing? I think that should be good enough.
So, what exactly do you see in a company? Do you see their capex? Do you look at the management? What is it that attracts you to identify a company? Because identification can be a difficult process.
I'm sorry, I don't want to sound. When you look for a life partner, what do you look for? You don't look for one factor. Is it a nice smile? Is it a nice physique? Is it a nice brain, sense of humor? It's a combination which has to come together. And it's an asymmetrical bet, as I said. So I get a 25% growth company at a 15 multiple with a high return on equity. It's a decent bet to take. And there are enough like that. I mean, there are 500 companies listed, which would come into a screen, which would reasonably qualify. Within that, you can screen and get it down to maybe 150. But again, to put in context, 30 companies are half of India's market cap. So they are well discovered, well researched. So it's not like crazy wealth creation will happen there. I can have wealth preservation for myself also over there. But the bulk of the money comes in what I call quartile three, which is the next 75. So if you get company 50 to company 100, typically if one or two of them end up becoming a large cap, like take the last decade was say someone like a Bajaj Finance, which was considered, also ran NBFC for Bajaj Auto, and it morphs into becoming the leading consumer franchise on the financial space and continues to compound 35%, and then the multiple expands as well. That gives you a, I think it's up what 60 times in the last decade. I mean, overall, of course, it's up a lot more, but that's the sort of returns which are possible in our country.
Thank you so much,
Thanks
sir.
so much.